Hello, everybody, and welcome to today's video. So today I want to talk about a stock that I own and that I think could be a sound investment. This is not investment advice, of course, but let me briefly discuss Celsius Holdings. So if you live in the US, you've probably seen that drink at grocery stores, convenience stores, or simply in the hands of people. Because Celsius is a hot product right now. So what is Celsius? Celsius is an energy drink. So the product is very easy to understand. It's an energy drink, period, right? We're pretty used to energy drinks. And perhaps the best way to evaluate the product or to eliminate it is to try it. You could try it and see whether you think it's a good product or not based on one's preferences. And I guess that's a good way to either eliminate the idea of investing in Celsius altogether, or maybe dig a little deeper. And so I've been drinking Celsius for a while now, and I think it's perhaps the best energy drink, at least for my taste. But energy drinks tend to be very very taste dependent, and so it all depends. It all depends who you are essentially. But uh, energy drinks are all based on caffeine, right? Caffeine is the product that most energy drinks are based on, and caffeine is always in demand. Caffeine is perhaps even more in demand in a recession when people have to work harder or they have to stay up longer. That's why you see people joking saying, "Oh, brought to you by coffee." Well, you had Elon Musk tweeting, I think two weeks ago, saying, "Oh, Red Bull works." Stuff like that. Energy drinks are part of a megatrend that is still growing. And it's the trend of alternatives to coffee, which has been going on for the longest time. Actually, if you look at Coca-Cola and Pepsi, they're technically alternatives to coffee, right? You have 35 milligrams of caffeine in each of them. And more recent energy drinks have been very successful. You had Red Bull and Monster, and now you seem to have Celsius. Red Bull seems not to be as popular as what Monster is right now. Monster seems to be the most popular one. Um, but Celsius is growing really, really, really fast. Um, and so it's a very, very interesting sector, very interesting business. But as far as the sampling of energy drinks, I find Celsius to be pretty enjoyable, and it really wakes you up. Um, but anyways, doesn't matter, right? Caffeine-based beverages, just like alcohol-based ones, they tend to be recession-proof. And that's so important right now. Everybody's looking for recession-proof products. People are not going to quit drinking coffee um, or energy drinks during a recession. And why is that? Well, that's because a $1.49 drink is really not the first thing that people think about cutting when times are tough. They're going to cut something else, rent a smaller house. I don't know. Don't do any extra dining out, but really these small items, they tend to not be eliminated. We're in a recession right now. I still drink coffee, and I still buy a Celsius once in a while, right? And that's I think most people are not they're going to focus on cutting out the very very tiny cost of an energy drink. Uh, and also, if you look about recession, and I'm sorry to speak a lot about recession, but we're headed towards a recession. Uh, Recession in the beverage industry typically is different. So what happens when you have a recession in the beverage world? It's more of a distribution channel change where you have your consumers who, instead of buying it at the convenience store, for example, or at the gym, they'll just go buy it in bulk at Costco or at the grocery store. So it's more of a behavior change in how the product is purchased rather than actually how much product is sold. And so that's why recession does not typically impact the manufacturer as much as it does the point of sale. The point of sale is much more impacted. And so they can shift distribution fairly easily. But let me go back to the fundamentals, the fundamentals of energy drinks. And so, what's the most popular energy drink um, and drink period in the US? Well, you'd be surprised to hear that it's coffee. Like, coffee is even more popular than bottled water, which is a fascinating thing to me. And of course, beer and wine are really high up on the list. And soft drinks being obviously most of the time energy drinks filled with caffeine, they are very, very high up on the list. Yeah, what can I say? Adults love caffeine. They really have to have caffeine. They love caffeine. So you have a built-in demand for caffeine. And it's important to compare the world of caffeine, right? So you can your traditional Coca-Cola or Pepsi, and by the way, these are giant enterprises based on caffeine. They have 35 milligrams typically of caffeine. Tea, another giant product, right, has caffeine in it. Coffee has caffeine, obviously, that's what it's named after. And energy drinks have a lot of caffeine in it. And so all of these products really, really have this addiction component that a lot of consumer products just don't have the addiction component. But caffeine does. If you stop having caffeine, you're going to have a headache for a day or two. And I think what's fun to look at is that even though a lot of people criticize this industry a lot, and I'll get into that in the next slide, it's been a very, very profitable industry. I mean, Warren Buffett is obviously famous for his investment in Coca-Cola and making so much money on Coca-Cola. He likes to joke and says he's 25% Coca-Cola, but of course Coca-Cola is a mature company, so I wouldn't be interested in Coca-Cola in this channel. But if you look at the drink sector, the caffeine drink sector, when it is in its early days, you can have growth. That's absolutely insane. You can have growth that is similar to a good tech stock. This is Monster Beverage. So Monster Beverage was almost non-existent in 2002. And this is a 20-year period in 2022. It achieved an average annual total return of 28%. Absolutely insane. 28% a year compounded over 20 years. So if you had put $10,000 in 2002, in Monster, you would have 1.4 million. It's very, very rare to find companies that compound this fast outside of tech. You typically only find this in tech. And so my portfolio is very tech heavy. I think a lot of our portfolios of growth investors are very, very tech heavy. This is an opportunity for us to get similar growth outside of tech. And so you reduce your risk a little bit. Not investment advice, of course. So I thought it was very telling to look at what happened to Monster Beverage. And could this happen to Celsius? You bet. You bet it could happen to Celsius. It could. So, anyways, this is not investment advice, of course. But let's look at what's the most important thing in an energy drink. And I know that they all say they have, a proprietary blend, patented blend, clinical studies. They have all of these different elements that they use in their marketing. But to me, as an investor, what I look at is caffeine. Like to me, that's the most important thing as an investor. Decaf. Few people drink decaf. You want caffeinated coffee. So caffeine is to me the utmost important of a product. And just looking at the caffeine standpoint, you can see that a Monster is only 160 milligrams of caffeine. I'm only, quote unquote, only, that's a lot. Red Bull is 80 milligrams of caffeine. And Celsius is the absolute winner, Celsius, with 200 milligrams of caffeine. 200. So a Celsius is like a really large coffee. So wow, you're gonna have powerful. It's gonna be a beverage that people come back to. It's gonna be a beverage that people buy and keep buying when you have this much caffeine in a Celsius. And actually, I typically prefer the Celsius packets because the Celsius packets you can mix it and dilute it a little more. But if you buy it in a can, which the cans are growing so fast, 200 milligrams of caffeine, that's gonna wake you up. That's gonna wake you up quite a bit. And so it's pretty clear to me that caffeine is the number one selling point of these energy drinks. And you could even make an argument it's about whoever will come with a beverage that has even more caffeine than the next one. But I think Celsius is very interesting because not only do they have caffeine, which is the big thing, and then the second big thing is they have low sugar, which is what a lot of people care about. And then I find their branding pretty clever. Like when I think about the branding of both Red Bull and Monster, I'm thinking, tough, reckless, complicated sports, human, and not necessarily reckless, although some of the sports that Red Bull promotes are pretty insane. But I'm thinking it's got this rugged, perhaps more stereotypically manly marketing that you don't have for Celsius. Celsius's marketing is much more about broad health, like broadly marketed to a millennial and a Gen Z consumer that is mostly interested in health, and doesn't necessarily want to overindulge or be overly excited by an energy drink. So I think the marketing is pretty clever for Celsius, but of course, you'll see that my intuition on the marketing is shown by the sales, right? Only the sales matter. Impression of a shareholder really don't matter as much as the sales. But before I get into this, let me quickly address one of the things that I'm going to get in the comments, which is a lot of investors absolutely hate the beverage market with a passion. So many people have been burned investing in beverages, but they hate it. It's a common claim. One very common claim is that distribution is next to impossible. It's the hardest thing. And I agree. Getting distribution on an energy drink is very, very hard. But if you look at Celsius, they have actually a lot of their stuff is sold online, especially when you buy it in the form of a packet to mix with water. So that's a pretty interesting point right here. And then they have a big partnership with Pepsi that they just inked a few months ago. And this is very similar to the growth story of Monster. And Monster has had its own issues with Coca-Cola, but they had a distribution story with Coca-Cola, and Celsius is partnering with Pepsi, and so they have pretty good distribution. If you look there, they're sold in a lot of convenience stores. They're sold in conventional grocery stores, vitamin stores, military vending machines, convenience, Amazon. I mean, they have pretty good distribution. So I would argue that the risk of distribution, we're past that risk right now. So it was a risk in the early days, but they especially have a partnership with Pepsi for their distribution, which I think is very, very powerful and one of the main theses for investing in the stock. And they're the number 3 energy drink right now. So they have a 5% market share in the US, which, if you know anything about S curves, that's like right the beginning of a sales cycle. When you reach 5%, you're just at the beginning of taking over a market when you often look at these S curves. And so that's very telling that they are 5% right now. They may have absolutely insane growth going forward, especially now that they have this partnership with Pepsi, which is going to push the product and really help them distribute. And Pepsi is also going to help them internationally. They've struggled in Europe, but Pepsi may be able to help them in Asia and especially China. So I think this is a positive, and not investment advice, of course, but their growth could become even more explosive going forward. And so this is a good transition to growth. And I'm at a loss of words for the growth that Celsius has. I really am. This is their chart. Feel free to pause the video to look at. But they are 62% compound annual average. But that's because it includes earlier years where they grew slower. And their sales really took a turn for the better right around the 2020s, 2021s, took a turn for the better, and their sales is actually accelerating. Sales growth is accelerating. If you look at Q3 over Q4, Q3 over Q2, quarter over quarter, which is what I like to look at where we get this situation on, we are 22% growth in sales in a quarter. If you analyze that, you're at 120% growth a year. Like if you do an instant snapshot of the growth rate, you're at 120% a year growth rate right now. And that is bigger than the past year growth rate of 98%. So absolutely insane growth for Celsius. Growth is accelerating. And the partnership with Pepsi probably has a lot to do with that. And actually, if you buy Celsius regularly, you may notice that it's often not available. That is a good sign. That's a very good sign. Let's talk about competition. Well, it's really tough to talk about competition for Pepsi, for Celsius, sorry. Celsius specifically names Monster as its competitor. But the marketing of Celsius is very different from Monster, I would argue. Monster is really a more rugged marketing. Celsius is really going after a more health oriented, gym, fitness, perception, right? They're going after the perception and selling to people who perceive themselves to be like that, or perceive or want to be associated with that image. They have a little bit of a weight loss component. So again, it's really tough to say. But as far as volume goes, and as far as who they're going against, they specifically identified Monster as their competition, which I think is a very good thing for us, because you remember what I showed you about Monster, the growth rate over the past 20 years has been absolutely insane. And you can define really broadly the market for energy drink. I mean, you could also say this is an alternative to coffee. So if things like Starbucks keep getting more and more and more expensive, people might turn to options like Celsius. But then again, and they're not always also competing head to head. Like you could still be drinking coffee, and maybe in the mid afternoon you have a Celsius. So it's not competition is there, but they are carving a niche for their product within that competition. Concentration, none that I can see aside from the US, but I personally think it's a very good thing to be concentrated in the US. For a US company, it makes sense. I believe the company is recession resistant, as demonstrated. This is a product that's high in caffeine. People are going to keep drinking caffeine. And the growth runway for Celsius is huge. The global market is 100 billion in sales worldwide and still growing at 8% annually. That's how many energy drink sales there are in the world each year, 100 billion. Celsius is not even at 1% yet. So they have a huge growth rate. So like if they get 5%, that's a 6 or 7x compared to their current size. So wow, they have a lot of potential if they keep growing this fast. Growth by acquisition, there's nothing to speak of here. They haven't done any major acquisitions. And marketing is okay. Marketing expense to me is okay. If you look at Q3, be careful, because there was an out of the ordinary item that skews marketing in way up, but that's not a recurring item. That's associated to their distribution partnership cancellation, so that's not related to that. But in general, we can expect 30 million of marketing, and marketing is really an investment in the energy sector world. If you go to like sporting events or basketball games or anything like that, they'll typically have trucks and try to give free drinks. It's part of an accepted convention. And I'll show you just a screenshot of all of our marketing. I think it's pretty interesting. You can clearly see their positioning. They are really going after Gen Z. They are really going after sports, sure, but not as extreme sports as what, say, a Red Bull would go after. They also have good distribution with the military. It's really really I think good. They also use a lot of modern ways to market, like podcast, etc., Spotify. So interesting way to do marketing, and really, like I said, even if you market to Gen Z and millennials, you're not gonna stop spending on a on a $1.50 or $1.95 drink. I just don't see people cutting that in a recession, especially if you justify it with, oh, I gotta work hard, I have to work harder, it's times are tough. I don't see it, but maybe I'm wrong. But the beverage business has been pretty recession resistant historically. So moving on. What are some of the things that I look at? And I know that I'm a little different in what I look at. I don't do the conventional Wall Street thing. Like, my way to assess growth stocks is very particular to me and to my channel. But bear with me. Let me just walk you through. So I only care about cash flow. I'm one who doesn't really care about stock-based compensation, even though we don't have a lot. I care about cash flow. I care about non-GAAP. And they have $14 million of cash flow, so they essentially break even. They could have a minus 10 million one quarter, that's okay. And they have a bunch of cash on the balance sheet since they did their Pepsi deal. So the Pepsi deal really helped them out. So bankruptcy is not an issue. They can entirely focus on growth. The gross margin is 42%. For physical good, that's so high. That's unheard of. For a physical good, I mean, even beverage is higher profit, but that's a very, 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 very high growth rate. or sorry, gross margin. The gross margin is insane. And right now, if you do price to gross margin, it's in the low 20s. But I argue that that's meaningless. I mean, this company is growing at 22% a quarter. So your price to gross profit ratio is relevant in month one, but in month three, it's not going to be relevant anymore. So for a company growing that fast, valuation metrics don't, they don't tell you as much, and what's funny about beverage companies is that if you study them, and I remember following Monster for the longest time, I have never heard anybody say that Monster was not overvalued. In fact, if you research Monster beverage, you still have everybody saying it's overvalued. It's always overvalued. No, the market really, really values these type of companies much, much higher than other companies because of, it's caffeine. People are not going to quit drinking caffeine. It's recession resistant. Lots of reasons. And Celsius, this is important to know. I typically don't highlight that in my videos, but this is important for Celsius. They're mostly a US play. They're mostly in the US, 90% of their revenue in the US. The product is not catching on in Europe. They tried Europe, not doing too well in Europe. Their sales are down in Europe. That's okay because they haven't even begun capturing the US market. And the product seems to show potential in China and Asia, but it's too early to say. So keep in mind that if you invest in Celsius, that's a US market, that's a US product. China is a tea culture. Europe is a very strong coffee culture. Drinks are very cultural, and America is the energy drink culture. There's a lot of, there's a coffee culture too, as anywhere in the world, but there's a strong energy drink culture here, and so I would take international with a grain of salt. That's not a part of my thesis to invest in Celsius for international. No debt. They have no debt. I absolutely love that. Celsius has no debt. It's an anti-fragile company. It's really great. Insider ownership is very high at 43%. They have a founding story very similar to Tesla, where the investor arrives very, very early on and poured fuel onto the fire. And I think his name is Mr. DeSantis. Is a can't remember his first name. DeSantis is one of the early investor in Celsius, and he bought 30% of the stock. And he had a strong vitamin industry experience and a strong involvement in the development of a company, but he's not leading the company anymore, and that's understandable because he's well into his 80s, and I'm not going to blame a founder for enjoying life in their 80s. So founder-led is no, but that's okay because the business, the instrumental man in founding this business, is now in his 80s. So I'm not going to hold it against them for them. Dilution has been strong in the early days. It's been pretty flat over the last 2 years. But watch out for the Pepsi convertible note. You may have some big dilution at some point in the future. So that's something to keep in mind. But I think the bigger threat to me, the biggest drawback investing in this company to me is that Pepsi may acquire it, and I hate that. I hate when a high growth company gets acquired by a slow growth company. I hate that. But anyways, I think that's one of the risks. And one of my metrics, but I seem to be one of the few investors to look at, is revenue per employee. I believe companies need to be very, very lean today. Companies have no excuse for not being super, super lean. And Celsius is ridiculous. It's amazing. It's amazing. At 2.57 million productivity, revenue per employee, 2.57 million for a company that operates in the physical world, that has physical product, is unheard of. And you can probably explain this a lot with their industry. They deal with vitamins, they have a lot of distributors, and they especially have a Pepsi partnership. But it's still stunning how high the revenue per employee is, and I love to see that. I really do. And let me conclude with my final slide is, how has the stock performed so far, for example? Well, it's done a 30x since mid-2019. So the stock performance has been stellar. And I would refer you back to the statement I made earlier about the company just beginning its sales cycle S-curve. That's what it seems like. It seems like they've begun their sales cycle S-curve. If you go back to the chart I had about Monster Beverage, you can clearly see that Monster Beverage growth has been pretty explosive as well over the past 20 years. This is just the type of company that can go viral. Once a beverage resonates with the population, it can go viral, and so that's what a lot of people point out. There's a big risk to valuation, uh, because but I think this company has room to run. Not investment advice. Anyways, I'm covering this stock because I have a position in the stock. I have a small position. My cost average is $52 a share, and it's one of the few stocks that is up this year. And so I'm happy with position size, and I'm not planning on adding right now. Uh, but I understand people who want to add right now. I really do, because it could be big. I mean, it could be one of these more binary stocks that you're betting it becomes the next monster. It could be really big. Um, to me, the biggest area of concern to me is that they get acquired by Pepsi. Like, I would absolutely hate that if they got acquired by Pepsi. Yeah, you get a 30 extra% over the current trading price, and that's it. The story's done. No, I want to own a business for a very long run. So that's one of my areas of concerns. Why it's a very small position. It's about a 1% position, so it's pretty small. So I'm happy with a small position. I may want to buy if we get a big dip. If we get a big dip, I may want to buy, because if you go back, of course, this is a heavily reduced chart, but if you go back to what happened at Monster Beverage before they fully captured their S curve, is they had a major dip in their stock price. Sure, there was the great financial crisis, and we're already in a crisis, and they're up. So I wouldn't have my hopes up that it's going to happen, but it could. It could. It could. And another thing that makes me not want to add right now is that we have so many deals right now, so many good stocks, especially in the SaaS sector. Even Tesla is so inexpensive right now. It's like there's so many inexpensive stocks right now, that you're kind of like, yeah. There's a lot of opportunity out there. This is the year to invest, not investment advice. And one thing that really interests me here, I find this very interesting. Short float is 27%. So you have a lot of short sellers who are losing money on this one. Yeah, it's not good being a short seller. If you buy this, early 2020, thinking it's gonna go down, the stock is way up. It's not good. The insiders aren't selling. Um, so yeah, we'll see. But there's a lot of short sellers on this company, and so you may actually have a short squeeze to the upside. I mean, who knows? But you have a lot of people betting that this company will go bankrupt, will go out of business. And so the question becomes: is if you're shorting a company, I would never short a company, because your maximum upside is 100%. So why would you short? I never got it, but it's like if you're gonna operate on stereotypes of business and not dig deep, this is an obvious short. But if you actually dig deep into the company, I think there's a lot going for this company. And so, to answer the question of the video, which is, can the stock 10x from here? Well, currently it's at $8 billion. And for reference, Monster is at $53 billion, and it's still growing. And Monster did way more than a 10x. A 10x would be 80 billion. And my trademark of the channel is the value of the US dollar. You have to account for monetary inflation. Monetary inflation is a big part of explaining the returns. And in 2032, per my 15% expected dilution of the US dollar, in 2032, $1 will be worth 25 cents of today. Which means that if in 2032 this stock was worth 80 billion, it'd be much closer to 20 billion today in value, in stock value. So could this stock 10x? Maybe. It absolutely could. But again, not investment advice. You know where my money is. I have about a 1% position in the company, a little less than 1% actually, in the company, and we'll see. But if the stock goes really well, does really well, if the stock is the next monster, 1% could be enough to really help out a big portfolio. So again, none of this has been investment advice. It's never investment advice, just entertainment, just edutainment. Thank you so much for watching. I appreciate if you can like and subscribe to the video. And if you can follow me on Twitter at @BeatTheDenominator, I also appreciate it. Thank you so much for watching, and I hope you enjoyed the video. Have a great day. Thank you.